Howdy, boys and girls. Welcome to Liberty Call. Today is Tuesday, January 3rd, 2023. First broadcast of the year. Hope everybody's doing well out there. Hope everybody had a good Christmas and Kwanzaa and all the, Hanukkah and all that good stuff. So anyways, not the best day to, not the best way to start out the year. See a lot of red across our domestics. Not terrible when you're looking at the Dow Jones. But it looks like NASDAQ and the S&P 500 took it a little bit worse. The rest of the world see a lot of greens across the screen, which is certainly a good thing. But I think 2023 is going to be probably at least the first half of the year is going to be nearly as rough. And wow, we got a herd of deer coming up my driveway. 1, 2, 3, 4 of them. So anyways. All right. Well, if it's your first time watching, please give me some thumbs up, likes, shares, subscribes. I would greatly appreciate it. There's probably a subscribe button somewhere along the bottom down here. You could click on that, and then you get notified every time I go live, usually, about a quarter after 2 or some mountain time. So, all right. Well, let's go ahead and jump in and take a look and see how the markets did today. The Dow Jones, like I said, was down by well over 100 points, only finished the day down 10.88 or 0.03%. The S&P 500 was down 0.41%, closed at 38.23. NASDAQ was down 0.76, closed at 10.386. Small caps are down 0.44. The VIX today was up 5.4%. It's currently at 22.83. Canada was up 0.3. Brazil was down 2.14%. Mexico up 0.09. European markets, mostly green here. Germany up 0.8. UK up 1.37. France up 0.44. The Euro Stoxx was up 0.68. Netherlands up 0.92. Let's see here. Italy up 1.15. Switzerland up 2.32. And Portugal pretty much flat at up 0.01. In Russia, they had their exchanges were split. The MOEX was up 0.86. The RTSI down 0.77. And the overnights, let's see here. Japan was flat. Looks like it was only up 0.83 points. See, Australia down 1.31. In China, the Shanghai was up 0.88. The SESE component up 0.92. China A50 down 0.21. DJ Shanghai up 0.93. Hang Seng up 1.84. And the Taiwan weighted was up 0.61. So, like I said, most of the day was in the green for the rest of the world. We just, it's tough to tell what could be spooking the markets this early in the season. But I think just a lot of the baggage we carried in from last year. So, all righty. Well, let's go ahead and read through this week's weekly economic update. Even though it is a Tuesday, we didn't, yesterday markets were closed, so I didn't get to cover this yesterday. Week on Wall Street, in a holiday shortened week, erratic trading left stocks marginally down for the week. The Dow Jones Industrial Average lost 0.17, S&P 500 slipped 0.14, NASDAQ fell 0.3, and internationals were higher by 0.61%. Stocks in lower. Steps by China to move past its zero COVID policies triggered concern that the economic reopening might aggravate inflation pressures, sending stocks lower and bond yields higher to begin the week. Technology stocks saw the most significant hit, with dimming prospects of a Santa Claus rally. The historical tendency of stocks to rise in the final trading days of the year and the first 2 days of the new year, stocks rebounded strongly on Thursday to erase the losses of the previous 2 days. However, stocks again turned lower to end the week with small losses. Lower risk appetite and amid uncertainty. In other words, in an otherwise slow week for news, 2 monthly reports were released highlighting the market's headwinds. The first was State Street's Investor Confidence Index, which measures the risk appetite of institutional investors. The December report showed the confidence of large asset managers in investing in risk assets like stocks has dropped over the past 2 months, explaining in part why stocks may have struggled of late. Meanwhile, the Atlanta Fed released its survey of business uncertainty, which reflected both declining expectations around sales growth and employment, along with growing uncertainty about revenue and employment growth over the next 12 months. All right. Economic data we have coming out this week. Tuesday, we have the Purchasing Managers Index for manufacturing, the ISM Manufacturing Index, and Job Openings and Labor Turnover Survey. Thursday, we have jobless claims, the ADP employment report, purchasing managers index for services, and Friday, we have the employment situation. Just a few companies reporting earnings this week. Thursday, we have Constellation Brands, Walgreens Boots, and Conagra Brands. All right, so that's everything on the docket for this week and the wrap up for the week before. Let's go ahead and breeze through today's market recap and see what they had to say. Stocks stumble in the new year, weighed by Apple and Tesla. Tech stocks, again, I don't think they're going to have a good, at least first half of the year. We'll see what happens after we bottom out some point this year when the market capitulates. U.S. stocks were off to a slow start in the new year, weighed by slumping tech giants as investors await this week's minutes of the Federal Reserve's last meeting. Apple shares fell more than 4%, threatening to close below a $2 trillion market value for the first time since 2021. Meanwhile, shares of electric vehicle maker Tesla fell more than 13% on Tuesday after falling 65% for 2022 after it reported lower than expected deliveries for the quarter and year. Stocks into 2022 with their worst showing since 2008 as interest rates rose throughout the year, pressuring once high-flying growth and big tech stocks. The Fed has been on a campaign to stop inflation, embarking on the fastest pace in interest rate increases in decades and it hasn't finished yet. At December's meeting, the central bank indicated rates would continue to rise until it was satisfied its mission to tame price increases was completed. The S&P lost more than 19% last year, while tech-heavy NASDAQ fell 33%. Investors are eager to put the year in the rearview mirror and are hoping economic data this week can help push them forward. On Friday, the jobs report for December is due, and data on manufacturing is expected this week as the Fed minutes arrive. There will also be oil inventory data and job openings data for investors to absorb. The market expects the Fed to raise its policy rate by 0.25 of a percentage point when it meets in February, which would be a slower pace than the recent rate moves, but still on an upward trajectory. Casino stocks were revised on the prospect of China's Macau gambling mecca reopening after COVID-related shutdowns and restrictions. Wynn Resorts Limited shares were up 2%, while Las Vegas Sands Corp shares were up 1.7%. Oil fell. Crude oil WTI futures were down 3.9% to $77.12 a barrel, and Brent oil futures crude was down 4.2% to $82.33 a barrel. Gold futures were up 1% to $18.44 an ounce. So looks like commodities were a bit split today. Oil's been up, the last part of last week, and over the weekend I was watching the oil numbers and they were climbing. But today they seem to have fallen, and gold really spiked a bunch today. So, all right. So that's everything that happened in the world of finance today. So, got one article I want to read through. It's called or titled "Required Minimum Distribution Mistakes to Avoid." It's never too early to start thinking about, being prepared for tax season for next year and making sure you're not screwing up and having to pay big fines. All right, let's go ahead and read through a portion of this. As you approach the age of 73, it's time to start thinking about taking required minimum distributions, or RMDs, from your retirement accounts, such as 401ks, 403bs, and individual retirement accounts. There are many rules and requirements surrounding these mandated withdrawals to be aware of, not to mention tax ramifications. To avoid costly mistakes, such as withdrawing the wrong amount or forgetting to take a distribution altogether, it's a good idea to make a long-term plan that maps out your retirement distribution schedule. All right. So mistakes to avoid with RMDs. Delaying your first RMD. Generally, you're required to take your first RMD by December 31st each year. However, for the first year after you turn 72 and are retired, you have until April 1st of the subsequent year to take your initial distribution. But if you take advantage of that extended deadline, you'll have to take 2 distributions within a 12-month time frame. That is because you'll still need to take your next annual distribution by December 31st of that year. Taking 2 RMDs in 1 year can impact your annual income as the distributions are taxed as ordinary income. Too much income in 1 year from retirement accounts can potentially put you into a higher tax bracket. I always recommend going into the RMD calculators, put in your birth date and the amounts. It tells you exactly when you need to take out take those withdrawals, and keeps you. And you print the report. You have a little bit of justification if you happen to screw up. So. Number 2, forgetting to take your RMD. Another common mistake is simply forgetting to take your RMD. The IRS assesses a 50% penalty on the RMD if you don't take it by the annual deadline. Quote, this is a completely avoidable penalty, end quote, says Shaw. Quote, most financial institutions give you options to set up automatic RMD withdrawals each year. These withdrawals can be set to monthly distributions if you need to replace your income, semi-annual distributions, quarterly distributions, or annual distributions. Automating your RMD schedule is a good way to ensure it will be taken care of, even if you forget about it, end quote. Number 3, mixing plan types to meet RMDs. For those who have multiple types of retirement accounts, it's important to understand the rules regarding annual distributions for each type, for each individual account. Most importantly, you are not allowed to use withdrawals from different types of retirement accounts, such as IRA and 401k, to meet an annual RMD threshold for one of these accounts. For instance, you cannot take withdrawals from both a traditional and your 401k in order to simply meet your RMD requirements for your traditional IRA. On the other hand, if you have several retirement accounts of the same type, such as multiple traditional IRAs, you can use withdrawals across these accounts to meet your annual RMD for one. Quote, if someone has more than one traditional IRA account, they can take the total IRA RMD from one of the IRAs or from a combination of them, end quote, explains Reddy. There's also a distinction to understand with regard to employment plans you hold with past employers you may have worked with over the course of your career. Here too, there are specific nuances that must be followed carefully. Quote, for those with employer-sponsored retirement plans from a former employer, the RMD must be taken directly from that plan. If they have more than one former retirement plan, is required to take the RMD from each plan separately. No consolidation permitted, end quote, adds Reddy. Number 4, combining RMDs with your spouse. While there are a host of financial benefits to consider as part of marriage, retirement accounts must be held individually. They are not joint assets, and that reality impacts how RMDs are handled. Often couples assume they can take the entire annual required distribution out of one spouse's account, but that is not the case. Quote, this will be viewed as a misdistribution for the non-withdrawing spouse, activating the 50% excise tax guideline on that distribution, says Reddy, as well as the larger distribution from the withdrawing spouse can have severe tax implications, including the possibility of pushing annual income into a different income bracket, end quote. And number 5, withdrawing the wrong amount. Finally, it's important to calculate your RMDs correctly. Withdrawing less than your RMD, for instance, may result in a tax penalty of up to 50% of the amount you were required to withdraw. There are RMD calculators available online that can help you sort through the complicated task of determining the correct withdrawal amount. Most importantly, you must calculate your annual RMD using the account balance as of December 31st of the previous year. But that's not the only consideration. Quote, RMDs are calculated by dividing the December 31st balance of each account by life expectancy as estimated by IRS life expectancy tables, explains Reddy. As retirees get older and life expectancy decreases, RMDs will increase at age 90. For instance, the withdrawal amount is almost 10% of the account's value, end quote. The IRS provides worksheets to help with these calculations. In addition, many financial institutions calculate RMD for plan participants, but the account holder is still responsible for withdrawing the correct amount. All right, so some good tax information I found courtesy of Yahoo Finance. Nice of them to put that article together via Mia Taylor. Actually, that was published yesterday. But it is linked if you want to read through it in more detail. And but like I said, there's lots of good calculators out there that you can use. Like I said, I always save the report. So if in the off event that I screwed up, and I usually do the calculations twice or 3 times a year just to make sure I didn't mess anything up. But having that, is some good evidence that, if you happen to mess up and you have to talk to the IRS, they'll typically be a little friendly with you. And maybe, maybe the first time, they'll waive those penalties and just make you pay what you owed. So anyways, but again, I'm not a CPA. Talk to your tax advisor for any specific advice. But, had to deal with the IRS, running a business, and most of the time, they're pretty friendly. It's just getting them on the phone is a big pain in the ass. But other than that, usually they'll let you slide and just, make you pay what you owe, especially if it's the first incident. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. If you need some help starting off the year, getting your finances together, feel free to reach out to me. You can book a meeting or drop me a phone call. All my contact information is there on the website. So hope everyone has a fantastical day, and I'll talk to you next time. Bye-bye.